Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 11th COT report of this year, and as usual we're going to start off with the changes in commercial positions. So here we go. As you can see, we've got the Mexican peso on top of a list with a 41% change in commercials positions, 44 in large speculators. Huge changes as you may see on the chart. These may actually be the largest change in the past 52 weeks time range. It is of course a bearish COT change signal that may affect prices in the near term. It's coming at a time when prices are actually at their highs right now, so this may be a signal that we can act on. If we open the 5 years chart, you can see that with this large change, we dynamically moved towards the bearish extreme side of the market. Of course, you may see that there's plenty of space left to reach those all-time or close to all-time bearish levels. Nevertheless, if you look at the past, let's say 3 years, then in that range we can talk about a relative extreme that may push prices back down into the downtrend channel that we have here. Moving on to the British pound, all-time signals. Of course, this is we're looking at the COT change signal, which is 36% change in case of commercials and 27 in case of large speculators. But hey, look at that all-time signals, both in commercials and large speculators. So we're gonna get back to that just a second. We have to first look at the change, which is a huge, similar to the Mexican peso, the largest in the past 52 weeks range, or maybe the second largest. Nevertheless, it's a large change. This time it's a bullish COT change signal, and since prices have gone higher, this may not be the best timing for that. But opening a 5 years chart, let's see this all-time signal that we have. Huge bullish COT extreme. You can see that the last time we were at such levels was back over here. You can see that the market could not react, and prices just went even lower from there. So the stress level is at all-time high. It's becoming more extreme week by week. Who knows how extreme this can become. One thing's for sure, stress levels are at a point in time when it's a big question whether prices can go lower from here, or is this really the end of this decline. The next market is the Chicago wheat with a 29% change in commercial positions. You can see the change size over here, a bit larger than average, but you can see we have similar changes quite often in this market. This is of course a bullish COT change signal. Jumping to the 5 years chart, you can see that we're just moving away from a relative bearish extreme. And as you can see, it was sort of a top over there, a bit of a decline afterwards. But the broader picture, as you can see, is that we had a bullish COT extreme that was present in the market for quite some time. And you can see that there has been a bit of a rally developing in the past couple of months. And this may easily continue in the next couple of months or years even, if that's going to be the case. Our next analysis is large speculator COT extreme. Well, we talked about the British pound, we talked about the Mexican peso. Let's jump to sugar, where we have a 51 report extreme. You can see the COT extreme here. The last major extreme was this bearish one. That was a good signal. You can see it on the chart, and from there prices have declined. Are we at a bullish extreme? Well, no, I wouldn't say that. Relatively speaking, maybe we would see a bit of a rise. But if you look at the 5 years chart, there's still a lot of space left to reach those significant bullish extreme levels. The euro is our next market with the 40 report extreme. Let's jump to that on the 5 years chart. Here we go. You can see that we are getting more of a bearish extreme picture right now. There's still some space left to reach those stronger bearish extreme levels, but we're headed towards that level. Small speculators are optimistic about the market. You can see why that when they're optimistic or in net long territory, that usually coincides with the top. This may actually be the case again. Who knows? We may see even greater declines coming. Russell 2000, our last market for this review, with a 34 report extreme. Let's just have a look at that. you can see how rapidly and dynamically traders are moving away from their bearish COT extreme levels. And interestingly, we're getting very close to bullish extreme levels, which is very surprising to see after having such a rise in the market. So that's interesting. But that is all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.